Hey guys, welcome back to my channel. I'm Anup Kokni, and today we'll discuss about the multi-time frame analysis, which I keep very oftenly been speaking in my day-to-day analysis videos. All right. So we'll put it and structure it in such a way that it becomes very easy for us to understand this whole concept and how we can start applying these principles on to day-to-day basis to get an assurance in terms of the trend direction and how you should be trading on a day-to-day basis. Right. What I have done for the A's is I have put a couple of slides which depict or which narrate a brief of what this multi-time frame analysis is, why, when, where you need to use them, and also have some of the examples of the charts which can be looked through for different possibilities within the multi-time frame charts, right? And what we would also do is we would get into the trading view chart, and then we start looking about the multi-time frame analysis on the live charts, right? And see which are the stocks which are following in the multi-time frame analysis and good to be traded either for buying or selling, or which are the ones that needs to be avoided because you don't see a synchronicity between the different time frames, right? So with this, I'll get started and just give you a brief overview of what multi-time frame analysis is, right? As the name itself suggests, multi-time frame is you start looking in a given stock or a index into different time frames. Now, the key question is you have so many time frames within your charting. Now, what is the ratio or a multiple that you need to look upon if you have to do multi-time frame analysis? Right? So different people have different ideologies, but I believe anywhere between four or six gives a very good view in terms of the trend, or even three or five in that matter, right? So uh, elders trading system recommends us to have between three or five, or even four or six. Now it depends upon your confidence and your comfort level, but I would prefer anywhere between four and six, which gives me a very good understanding in terms of what the time frame what the price action is on the given time frame. Right. And another important thing that you need to look upon this is, now usually most of these indicators tell you which is the stocks that needs to be traded, right? Whereas with multi-time frame analysis you are in a position to eliminate the stocks which are not necessarily falling within your defined set of rules or the method that you want to adopt to, right? So it's more of a process of elimination than a process of acceptation, right? Treat it that way. Now, what I have also tried doing in is you would have different types of traders, right? So some traders who do it on a long-term basis, some people just hold it for a couple of weeks, and we also have our specialized group of intraday traders. Now, how do each one of them do this multi-time frame analysis, right? So if I am a long-term trader and I only want to invest at regular intervals in the markets, just to get a view of what is that I need to invest at that point of time, I can use weekly charts as my trend chart, right? So weekly chart would have a long-term ongoing trend onto it, where I get to see whether it's in an uptrend or a downtrend. And then I get onto the daily time frame to check the levels, whether the daily time frame is matching in alignment with the weekly time frame. Otherwise, I would wait for the daily time frame to get into alignment with the weekly time frame and then finally get onto the execution chart, which is another lower time frame chart. Lower time frame, when I say lower, higher, it is all in a ratio of between 4 to 6, right? So this lower time frame will help me to enter into a given stock, right? So what I'll do is I'll not just right away enter there. I'll wait for the pullback. I'll wait for the correction to happen on a lower time frame, and then I'll start filling in my positions for the volumes that I wanted to buy on this particular stock for a long term, right? And when I do this, my exits are always planned on the daily time frame, right? So my execution chart is primarily for the entry, and my execution and my exits are usually planned on the daily chart. If I use moving average as a reference, which is what I have used in this particular discussion, so anytime the candlestick closes below the moving average, that's the time for me to exit, and I would be moving out of this particular stock by booking in the relevant profits. Okay. And likewise, the swing traders can look at the daily time frame for the trend chart and then enter and exit on 4 hours and 1 hour charts. Uh, Intraday, I mean, since I am primarily an intraday trader, I'll focus more upon the intraday time frame, and also have some of the examples from the intraday time frame, which can be easy for you to understand and get a feel of it, right? Now, when it gets to intraday chart, I think the 1 hour chart plays a very important role. Whenever you get to see the candlesticks been trading above the 20 EMA and 200 EMA on a 1 hour chart, that gives a clear indication that it's in an uptrend, right? Likewise, I would like to see that same behavior on 15 minutes chart, and then I enter on a 3 minutes chart, and exit on the 15 minutes chart, right? So that's ideally how I try to do. So what is very important is this is the chart. These are the charts which are the baseline for you. This will be used for driving. This is for confirmations. And this particular chart is for entries. And this again is for exits. Yeah. So that is how you would be trading in the multi-time frame. Now, how do you look at a long-term time frame? What I have tried doing is I have taken an example of one of the stocks, which is AU Bank in this case, and trying to put in a chart sample to understand how you can read the trend in a given stock. Now, if you look at this, if you look at the chart a day before May, which is on April 30th. April 30th, this particular stock started getting into an uptrend momentum, right? And since then, if you look for the next 10 to 12 days, it has been in an upward momentum. Now, when I look at this particular chart, and let's assume that I'm looking at an AU Bank on a 15-minute chart. Now, looking at a 15-minute chart, I'm not very sure because it's been in some time consolidation, it's getting an uptrend, then again there is a sell-off, then again there is an uptrend, right? So now if I have to trade in AU chart, by looking at this particular trend chart, I get a clear understanding that it's in an uptrend. Now, if I have to avoid having in the losses, at least the big losses, what I'll do is I'll only look for the buying positions within AU Bank. Now, how do I do that? I get over here. Now I'll wait for the price to come over. If let's assume if I would have done this yesterday, I would wait for the price to come up to this levels. The moment there is a close below this moving average, I'll go and buy anything on this, right? And now if I have to buy, I would again not buy on a 15-minute chart. What I would do, I would get onto a 3-minute chart or a 5-minute chart, which is a lower time frame, and I'll wait for this correction to happen here. Okay, when this correction happens here and the price closes above this, that's when I start buying this, and then I'll be in this trend until on the previous page my stock doesn't close with a candle below this moving average. All right. I'm not sure if you followed it, completely, but let me give few more examples. Now, let's take an example of an ICICI Bank, and ICICI Bank is moving in a bullish trend. Okay. Now, with ICICI Bank, you look at so this is more of a positional trade, a long-term positional trade. You look at a weekly chart, and what you get to see with the ICICI Bank is you are seeing an upward momentum, right? So the prices are moving upwards. Now, what you do is you get on to the next time frame, which is your daily time frame, and see that your prices are also moving upwards. So now this gives you a double confirmation that you have to only trade in ICICI Bank for uptrend, right? So you will have to only buy. You do not sell anything in ICICI Bank. Now, looking at this point of intersection, when you had both of this been in an uptrend, now you would buy something here at this particular point and keep driving this until your candlestick closes below this on the daily chart, right? So that gives you the delta between your buy price and your sell price is your profit. And another advantage of doing in a multi-time frame analysis is now understanding that on a daily time frame you are on an uptrend. Now, if you are entering in a lower time frame, right? This the size of the candlestick is definitely small on a lower time frame. And when you keep a stop loss, which is usually one or two candles below the entered candle price, you would not lose too much, right? So your loss would always be less, whereas your profits is something either you can define it in a ratio of 1 is to 2, 1 is to 3, or be with the market till the market doesn't tell you that it's been overrun and it has exhausted for the upward momentum, and you can exit at that point of time, right? So that way you would be able to manage your risk reward ratios in a very well way. Yeah. Okay, let's take an example of another few stocks and see how things shape up there, right? Let's look at the Indus Tower. Now Indus Tower is in a bearish trend, and I have tried to take an intraday trend here. Now, when you start selling in the when you start looking at the Indus Tower has a bearish momentum that you get to see on the 1 hour chart. The price is continuously closing below 1 hour chart. uh, below the EMA on a 1 hour chart. And likewise, if you start looking into the 15-minute chart, so 15-minute chart exactly shows you that even at the same point of time, the price started moving below the moving average. Right now, which is the place for me to enter? I get onto the 3-minute chart, I look at the moving average. The moment it's broken down the moving average, I start selling it there, right? And I would hold it until the candle closes above the moving average on a 15-minute chart, which means that for the last 1, 2, and then 3 days, I have been in a downtrend. I have sold somewhere at this particular point, which is, let's assume, whatever the amount. And then this particular point, this two levels is what I make a profit, right? And the primary confirmation is that I would only look for the selling opportunities in this particular instrument. Okay, so the quick synopsis of what multi-time frame analysis is. See, the whole purpose of doing in the multi-time frame analysis is point number one, to get the confidence that you are on the right side of the direction. Point number two, you keep your stop losses minimal so that even if things get, you know, uh, things do not work in your favor, you're losing a very small stop loss and your losses are minimal. Point number three, you would be trading in the trend for the whole time, if not with a risk reward ratio limitations of 1 is to 2 or 1 is to 3, and get the maximum of a given trend in a given time frame, right? And finally, your exits are well planned. Neither you would be getting out too early, nor you would be holding it back for too much of time and giving away the profits that you have placed, um, profits that you would have targeted on a higher time frame, right? And also, this gives you a very good bias in terms of placing in your stop losses, right? So there are different methods of placing in the stop loss. It could be like the low of the candle that you have entered, or it could be the previous candle low, or it could be two back, one upwards. So there are multiple types of stop losses, I think, which we can also again discuss at a length in future by a different video. So this is a quick brief on how you would be doing in the multi-time frame analysis, right? And now let's quickly look on the charts and try to understand in charts. If you have to do it on the live charts, how will you do it? Now let's take an example of Nifty. Okay. So this is Nifty, right? So what do you look at Nifty? So before you start analyzing this, keep on the back of your mind that 200 EMA and 20 EMA, right? So these two are the baseline measurement criteria for us. Now, anytime if the price is trading above 200 EMA and also about 20 EMA, it means that it's in an upward trend. Okay. And when it is trading below both of this, I don't know where is the case. Yeah. Trading below both of this together, then it's in a downtrend. All right. And if one of them, if the candlesticks are trading in between these two, then it's like a no man's land. So there is no particular trend. You will have to probably wait for the trend to come over into this particular area. All right. So keep this on the back of the mind. Now, looking at this particular instrument, what is that you see? You see that it's trading about 200 EMA, it's trading about 20 EMA, and the candlesticks are all going towards upwards, right? So it's in a uptrend. So if you start looking at this from this point, it gives you a confirmation that Nifty is in an uptrend. Now let's get on to the 15-minute chart. Now if you get on to the 15-minute chart, all right, on the 15-minute chart, what do you see now? There has been an uptrend, there has been a downtrend, and now finally, I'll close the VWAP so that you don't get confused with the VWAP. So now if you look at this particular point of time at afternoon 12:15, uh, on 25th May, this got into an uptrend. So this is the point where I would enter. I would rather enter at this particular point when both the 200 EMA as well as the 20 EMA have crisscrossed and also my candlestick has closed above the 220 EMA. So I'll enter at this point and keep driving this until my particular stock doesn't close below this 20 EMA, right? Now, if I would have entered into this, do I enter into this particular chart? No. I got a confirmation from a higher time frame. I will be driving this, but I will be entering onto this particular chart. Now, in this particular chart, Now, on this particular 3-minute chart, if I would have had to enter, where is the safest place for me to enter? So, this is my place where I would have entered. So, from here, I would have got into this position and I would have held this. And as you can see into this as well, uh, as you can see into this particular chart too, that it has been in an uptrend continuously for all the time, right? So there is no looking back from the time you have entered at particular level, right? So this particular level is nothing but 18,266 and it is still going on until 18,292. So 230 points momentum in one side and it's still going on. So this is the power of multi-time frame analysis. So let's try to do this on some of the other stocks and see whether it really looks like this and you will have a feel of you know how this multi-time frame analysis works. So let's open something. Just give me a sec. Okay. Let me open naukri.com. I'm opening Naukri in all the three charts so that I don't keep changing in this on different things. So just bear with me for a minute. Okay. All right. Okay. So now if you look at Naukri.com, the price is very much trading above this 200 EMA. It's above also trading above 20 EMA, and then it has a closing above 20 EMA, right? So this gives you a very good confirmation in terms of Naukri.com is in a uptrend. Now let's get on to the 15-minute chart. In 15-minute chart at this particular time, which is this particular level, it started breaking through, and this is where you get to see an uptrend momentum. Okay. And now once you finish this 15-minute chart, if you have to start trading into Naukri.com, you will wait until this particular level is being tested. And once this particular level it gets broken and the candle closes above it, you will start getting into Naukri.com. And look at this, how beautifully it has been rising for the whole day. Right, so let's do a similar thing on Zeal and see if Z Entertainment Limit has had any chances for us today and does he show anything? Okay, so if I had to trade in Z Entertainment, I would have not traded because the price is not yet closed about the 200 EMA. 200 EMA is very important in trading because that's assumed to be a measurement, a thermometer of stock market, I would say, which tells you that whether the stock is being trading in an uptrend or a downtrend. Now here it is exactly at a 200 EMA, which does not give me any confidence to trade into the Z Entertainment, right? Now, if you look at Indus Tower Limited has got back into a uptrend after after the past 2 days, right? So now, if I have to trade into this, I'll start looking at the higher time frames, right? So the higher time frame showed a trend. Now, getting onto the middle time frame, which is an intermediate time frame, I would have entered here at this point of time and would have kept riding this like this for the last 2 days, right? And if I would have had a profit targets of 1 is to 2 or 1 is to 3, I would have already booked in the profits and I would have come out. But otherwise, my way of doing is I keep continuing until this particular candlesticks do not close below the 20 EMA chart, right? On the so on the entry chart, probably I would have entered with a very low risk entry. Hmm, wow. I would have entered at a very low risk entry at this point of time, right? At this point here. This would have given me very good amount of profits. I would have just continued to get into this and then hold it on this for the entire day. Sorry, I was yawning. All right. So that's a quick understanding on the multi-time frame. So if you have any questions or queries, please feel free to post in the comments. I'll try to come back and answer those questions in another video, or I'll be replying back to your questions if they're very simple over there. So just let me know how did you find this study, and would you be interested to see more of this coming through, which will help you understand the concepts easily, right? So that's all for today. Thank you very much, guys. Have a good day. Cheers. Bye bye.